Welcome to Confessions episode 22. I'm Chris Sweeney. I'm just the idiot along here for the ride. But the maestro is waiting to join us from his lair in St. Bart's. Hugh Hendry, how are you this week?
Well, I think I'm no longer a hedge fund manager. I'm coming back as the financial beat poet, and I'm laying down some tracks on Twitter and elsewhere. But more than anything else, I'm just determined to have fun.
But you are. I mean, if you were to put profession, what would you have? You'd have to put down hedge fund manager. That's been your life's work, even though you're not actively pursuing the hedge fund game at this particular juncture.
Or I could take the lens and move it backwards a little bit and say professional risk taker. Like, you know, there's a frisson. I just seem to be the light, moths to the light. I kind of need that energy of going, oh my God. And so, yes, there's no hedge fund today, but there's this enormous construction project in my physical property Bitcoin in St. Bart's. And there's an energy. And of course, there's an energy with this, and there's an energy every time you press that send button. And to everyone who tuned in last week, thank you very much. We really got a great audience last week, which kind of invigorates. I'm speaking for myself. I'm sure I'm speaking for you, Chris. It invigorates both of us. Yeah,
I'm doing naked star jumps around the room after I see a good set of good comments. I'm ready to rock people. So I'm on this one today. So we can just check in, Hugh. Mike Tyson's been seen in St. Bart's. Have you run into Mike Tyson? Has there been any interaction? Do you know where he's had lunch or anything like that?
Well, he was staying at Cheval Blanc, which is a wonderful hotel on the Flamand Beach. But remember, I spent Christmas in London and got back here on the 4th. And
so you've not been doing a few rounds on the beach with Mike Tyson. Fair enough.
I was meant, however, I've been doing rounds with myself. I do this epic beach workout with bands, resistant bands. If you're coming into land at St. Bart's, and there's two ways. The normal way, you come in and basically the plane nosedives into a mountain. It literally is it is like the ascent of Dagny to Galt's Glutch. I have to forgive you. I have to seek forgiveness because I am obsessed by Atlas Shrugged. I want to say I'm reading it for the second time, but I'm actually reading it for the first time in terms of that I read it too quickly, and this time and against the backdrop of the alien body invasion that we call COVID, it has a clarity, which I find is like a revolution in my mind. Anyway, when there's no wind, you approach from the sea. And if you look out to the right and you see some nut job dressed in black with bands, I am not part of the airport personnel. I'm staying younger.
Love it. We can see bird's eye view of Hugh Hendry welcoming you, the welcoming party to St. Bart's. Love it. Well, I wanted to bring up an old friend because people from last year would have known about our old friend Chase Coleman III has made a loss. But the reason why I wanted to talk to you, Hugh, briefly about it was he was up 13% until the last 2 months of the year, and then the wheels came off. And that's kind of what we were talking about last year, this arbitrary 12-month booking period was.
So, I mean, you use a lot of past tense. I mean, he lost money last year. How much did he lose, Chris?
Well, last year, it was all going well. Up till the start of November, he's up 13. And then by the end of the year, he's down 7. So I think saying here, November he lost 8, and then December he lost 11 pretty much.
Two things. So, we're bringing up best of breed in terms of Rokos, who's a best of breed fixed income trader, and Chase, who I think the long-term performance has been plus 20%. And of course, the performance in 2020, which was, with the alien body invasion, when you really needed alternative performance and protection, these guys really delivered, and the returns were exceptional. Their performance and the fact that they were able to achieve such high returns in 2020 tells you that these guys have the gut, they have the stomach, they have the inclination to manage big swings in their performance, that they can live with volatility and they can use it to the client's benefit. But to Chase's credit, up, what did I say? He made 40 or 48%.
Yeah, the year before, yeah.
And it to be down 7, big deal. He's got a pass. Last year was flat, absolutely no issue. So, to my mind, the guy continues to motor, as does Chris, because in of the follow-up material I read, he's just being swamped with people wanting to give him money. So,
as you say, being in a hedge fund, it's like mirror, mirror on the wall. Every second your performance is being judged in whatever second you choose to look at it. Okay, well, Chase, I'm sticking up for you, Chase. I've got your back, my friend. I've got your back. Another thing I want to ask you about is, last week we talked about Money Heist from Netflix, and this week I wanted to mention Succession, which is a huge show on HBO. I don't know if anyone's seen it. The thing I want to ask you about, Hugh, was there's a scene. It's called Retired Janitors in Idaho. End of season 3, and there's a big battle for the company, and sort of different investors and hedge funds, and everyone's trying to get, who's getting control of this and who's getting board seats. And it comes down to a deal's brokered, but the executives of the company can't use private jets. And I think it's because one group just want to stick it to the people on the running the company. Now, is that realistic? Do you have these battles behind the scenes, and is there like petty demands like that thrown out? Is it as political and as personal and as kind of sort of petty as that, or is that just artistic license on the part of HBO?
There's artistic license. I like Succession. So back to that episode, hedge funds vindictive. There's nothing vindictive or petty about that scene. I would actually use that as a stepping stone to go back to Oliver Stone's first Wall Street epic, and what that was capturing the rise of an alternative finance medium, the junk bond, where risky companies were being given credit access. They could actually raise lots of money, and adventurous souls were using that to take a run to buy other companies. And so what actually happened was a revolution in finance made some big companies more vulnerable to outsiders. And there were mistakes, and there were some sharp and bad practices, which was kind of Oliver Stone's kind of motivation behind that movie. But actually, the greed is good speech is again very Ayn Randian. It's never be embarrassed by the gains that have come from your graft and your intellect. Never apologize for that. And and some of those takeover battles were sleepy companies that where it was the fiefdom of the board of directors who were left unchecked. Yeah, I used to say when I was on BBC and whatever, and having to justify myself, sort of pompous asses being paid a great deal of money, but then as media presenters, and then turning around to me and say, well, yeah, but what do you do for society? Well, first of all, tell me what you do. You sit in a studio and a guy feeds you with stuff. What do you do? But I'll tell you what I do. I and my like, we are the guard dogs. We snarl and we bite if you provoke us. We're the guard dogs of capitalism. And you step out of line and I'm going to be on you. And I'm going to be relentless. And I will bring change. Which will be to the benefit of all. But most importantly, change which will be for the benefit of my bank account. I will make no apologies for that.
We'll park it there. Hugh, do you like ice cream? More particularly, do you like Ben & Jerry's?
I have retired from the consumption of sugar. The problem with one spoon is that you end the whole night spooning.
Well, the reason why I ask you that is because Unilever massive, huge global company, loads of brands, and we just picked Ben and Jerry's because there's a fund manager, Terry Smith. He's got 1.2 billion invested in Unilever, but he's not happy about the direction of the company. And Ben and Jerry's is one of their brands, and some of the things Ben and Jerry's do is they don't sell in the occupied territories of Palestine. They had Changes Brewing flavour, which is about sort of police brutality in America. They've also spoken out about white privilege and the BLM movement, so they're quite political. But what Terry said was, he said, Unilever seems to be labouring under the weight of a management which is obsessed with publicly displaying sustainability credentials at the expense of focusing on the fundamentals of the business. What do you think, Hugh? Is the world changing? Do people want their companies to be ethical in doing things, or is it all about the Benjamins, baby?
So I think he was outing them as being yokish, and I think he's 100% correct. I am invested in a wonderful restaurant business in Venice Beach in California. Legendary. And the discussions I had with the former chef, he didn't want to make money. And I was trying to explain to him that a profit and the need to achieve a commercial profit, a profit commensurate with the efforts, the talents, and the unique nature of the assets. It's not a choice. It is beholden upon them. It's like withdrawing water from a plant. Without it, it will shrivel and it will die. And again, I would have very long Ayn Randian kind of conversations about it, and they're like, they were Marxists. I'm the acid capitalist. They were Marxist. They were acid Marxists. You know.
Isn't there an argument that things are changing? You know, a lot of younger people are thinking they only want to buy ethical, whatever that means. You know, there's a movement towards that. So even if you don't believe in it as a board or as a company, that's a way to attract money, because people now are maybe a bit more, I don't know, less willing to turn a blind eye to some things in certain companies, you know, consumers, no?
For me, this is the rhetoric of the moochers and the looters, the people that kind of try and make the entrepreneurs and the wealth creators, the atlases which bring the wealth to nations, which allow for redistribution, to make them feel ashamed of their great gains, and they should. It's, you know, there's some, you know, guys who fly a little bit wide, but by and large, commerce is there to be should be applauded. And so, like where we are just now, ESG, environmental.
No, it's ESG. Is it not environmental social governance? Is that right? Environmental social governance. Yes.
So this again, when you start displacing the motivation of profit with ideals greater than profit, you lead into, again, the world depicted in Atlas Rand, where all the entrepreneurs say, you know what, over to you. I'll leave it to you. And one by one, the pillars of the economy come crashing down. And we're getting closer into that situation. They are making it impossible to mine or extract or drill for essential energy components, be it crude oil, be it coal, be it natural gas, because of the simplistic, well, we got to save the planet and we got to do it now. Okay, but in doing so, you're forcing the price of oil higher and higher and higher. And you've seen widespread collapse of energy intermediaries who were supplying ordinary folk, who are now have gone from the stability of a long-term price contract to being charged at the market. And the market price just now is absurdly high. And so you've now got a situation, and I'm surprised you didn't mention, there was an email that went out last week from one of these energy companies to people in the north of England. Hey, you know, to stay warm, we suggest you hug your pet, or like you kind of run a little bit. That's absurd, you know, and that's where we're going. Principles will lead us to the abyss.
We're getting into Hugh's monthlies. This month we are tackling October 2005. And we start off with a quote from the Beatles. I think we teased it last week, Hugh. I think you teased up the quote last week. Hugh, isn't that a guitar? You could probably get that guitar going and sing as that intro if you want, no? Is that a guitar over your shoulder? I see. No.
One day, yeah, I might. It is. I think it's the 7th chapter of my midlife crisis, which has now seen me not reach for the bottle, but reach for the guitar. And I got myself a beautiful bass guitar, the model that New Order used. I'm beginning to come together, which is A5, A5, A12, G10, D12 come together. But I'm absolutely hopeless.
Very nice.
But
is that Peter Hook? Is that Peter Hook, the bass player? Is that Peter Hook? Am I right in saying that in New Order? No?
It is.
Yeah, Peter Hook, yeah. He's a nice guy, actually. I've had a brief interaction with Peter Hook, but don't worry about that. No one's interested in my interactions. Carry on.
Oh, well, but you are the rock journalist of the.
Well, in a previous life, I used to talk to a few rock stars now and again. Yes, so yeah, I've had a good chat with Hookie a couple of times. Yeah, good guy.
Yeah, there you go. So I mean, we were kind of seeking to lambast Chase Coleman for the reversal of fortunes which he has endured over the course of last year. He was kind of up swimming November. And then up 13%, I think you said, and then ended the year down 7%, so you had a 20% reversal. If you go to the end of that report, I just hit an air patch. So there's the performance, and the light blue color is the NEV, and it looks as if I've fallen from about 80. I'm guessing this from about 86 to 26. So there's a 20% reversal. And in that paper, and indeed on Instagram again, I use more of it. I began to ask, am I schizophrenic? I don't respond to situations as best as I should. That month was a shocker. I think I lost 7%. And I'm frightened by what is not there. But I'm indifferent to what's staring me in the face. Again, my predilection is for things which are yet to happen. And I go on to describe the month of October as being ghastly.
I wanted to ask you something. Okay, I'll come back. No, well, I just want to ask you briefly while it's up on the screen there. Ask yourself, because you're right at the end, ask yourself, what would you have done differently in October 1979? Paradoxical thinking may be the new black. Which I thought was quite interesting because you're actually almost doing this podcast in advance, no? Was that what you were thinking back then? You were thinking what would I've done in 1979, I apply it today in 2005?
Exactly, and thank you for that, because for me to understand, recognize, and navigate the path which was ahead of me, I was going back so what is that? I was going back 16, 17 years. To 1978, 79, and I was looking at a great pivot point, and I was examining. So what happened? It's a bit like if any of you watched the interview, the Hedge Fund Masterclass with Angus Fletcher, we were discussing creativity, but his point was read books. It's the greatest virtual reality game ever, and Lewis Hamilton driving his Formula One car, he spends the majority of his time in front of a screen driving a virtual car, like making decisions all the time. And that's what I was doing. So two things. I was in the midst of saying that the money that I lost in October 2005, one of the kind of spooky events that happened was that it was a rare day in that what did I say? 99%? I'm just going to make it up. Like almost every listed company fell on the day. That's exceptionally rare, and I wanted to use this monthly to talk about today, not to talk about 2005. And so I want to use, with that, I want to use 2005 to kind of explain how you might think about I think the path which may be appearing in front of us with regard to Treasury. So at the end of last week, I said to you that the US Treasury bond market was perhaps the greatest ever bull market in the history of modern man. It's a bull market where in 1982, so remember, 82, that's kind of close to 79, which we gave a name check in the monthly. But in 1982, US Treasury bond yields flared. They reached a high of about 16.2%. And then ever since, those bond yields have fallen. And during the COVID crisis of 2020, they reached about 45 basis points. So if you think of the inverse of that, which is the price has been electric. And it's been an electric price, not the price of a hedge fund, where Chase and Rocos have demonstrated you can have these sharp, volatile moments. It has been this epic one-way cascade of making money in the least risky asset in the world. In fact, it's called riskless. It's the risk-free asset. And you've made a bundle. So not only have you made a bundle, because of its riskless capacity, people haven't owned like 100% of their portfolio in bonds. They've owned 200, 300, 400, 500%. So the returns which have emanated from the bull market and the treasuries have been astonishing. Okay, and that's persisted for 40 years. Now, there is immense speculation that bull market is at an end, and this the start of the year has been statistically interesting in that it has been the first 5 days of this year, I think, were so the first trading week were the worst drawdown in the value of 30-year US government bonds. So they are the ones that, the longer their duration, the longer the term maturity, the kind of is a little bit more kind of pricing uncertainty, so their price moves a bit. They dropped almost 10% in the first week of this year. The 10-year dropped about between 5 and 6%. That's a big deal. They're really big numbers, and so they're having VAR moments. They're having the first week of this year was a statistical oddity in that market, and so hedge fund risk control dashboards have been going beep 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 beep. It's like sitting in Chernobyl. It's like, guys, close it down. And you go, oh no, close it down. And of course, these are moments which are shared by the community, and so there are epic moments. The course of markets are littered by moments where everyone has to reduce their risk. What does that mean? They have to sell, and everyone has to sell at the same time. And normally that's where you would look for a broker-dealer network to go the other way. But you turn around and like poacher gamekeeper, and then everyone's turned into a poacher, and there's no one to sell. And so you get air pockets where the price falls. And we've been in one of those situations. And so people are saying, boom, I told you, this market is changing, and yields over the next 40 years are likely to rise. As a statement, I agree with that. Over the next 40 years, yields are likely to rise. But let's do paradoxical thinking. I don't believe that the most glorious, the most epic bull market in history is going to end without a bang. It's going to end with a whimper. That it's going to be predicted by everyone. It's going to be predicted by the morons that write financial media, which is their prognosis just now. If you remember, I've tried to chronicle previously the turning point in the gold market. Gold had fallen for 25 years. The stock market had gone up, I don't know, 5 or 6-fold, if not more, in terms of the Dow, probably more. And gold had fallen about 70%. So like for a long time. And of course, before it truly turned, it nearly killed me, because it kind of went, we're rising, we're now in a bull market, and then I went, boom, no, we're not. And, and I lost a bundle of money. So I mentioned 82, I mentioned 79. And so that was just a point of what you have to recognize is the peak in government bond yields were in 1982, and they were 16%. And we are immune to the absurdity of what I've just said because it's such a long time ago. If you were to transport yourself in a time machine, go back to the summer of 1982, and what you find is the US economy is in a deep recession. What you find is that inflation has clearly demonstrated that it has bottomed. So inflation was enormous, and inflation was on a clear trajectory down. And so if you were awake, if you had any thinking marbles in your head, you would be long government bonds. And yet those government bonds, they protected the immense fortune of the next 40-year bull market. They wouldn't let anyone in because the price would not reflect reality. It would not reflect the reality. Inflation was going down and the bond yield was going to like Venezuelan levels. It was like one of the great hedge fund managers, whose name now I can't remember. I drink too much tequila, but he had made that switch. Steinhardt had made that switch. And this is how absurd it was, Chris. He was being sued by his investors for investing in government bonds. It was like, but you don't do that. You buy equities. We don't buy bonds. And look what happens when you have this style drift. We're suing you, you mother, you idiot. That's what happens. Future bull or bear markets are protected by a moat of the most absurd. And so I think you will if I chart the course of the next 3-4 years, it depends on what happens in China. My suspicion is that China could really be hit hard, and if it's hit hard, it'll take the world down.
Yeah, we're all might have a problem here.
But even if that doesn't happen, I think you will see inflation show evident signs of having changed course, which is to say that inflation will no longer be falling. Not immediately, but over the course of the next 3 years, I think you will look back and you can see that inflation, the rate of change was changing. And yet I think bond yields will go to record new lows. I think we'll see new lows before we see the end of the bull market. And just because that's how markets operate. And that was my franchise. My franchise was I rejected the absurdity of rational thinking. Markets are the theater of the absurd. And to participate, you have to be a student of absurdity and paradox. And if you're watching this, you're watching it because you understand that statement.
I mean, how much is herd thinking a thing with hedge fund managers? Because you were a contrarian investor. You were always sort of on your own thing and doing your own thing. And we've talked about there how other people sort of, that guy being sued, for example, because he was doing different things from someone else. Are we in an age where hedge funds are herd thinking beings, or is there still room for the mavericks?
Chris Rockoffs, I keep mentioning Chris Rockoff, but Chris is a maverick. He really is a maverick. And there are mavericks. There are not many. Hedge funds now call themselves Maverick. There's a very successful fund. It has a lot of money, and it's called Maverick Capital. Lee Ainsley. You meet them, they're really, really good. Are they Maverick? But they're really good. Maybe I should be less like Lee, But that kind of tells you, it's like, hey, you kind of start asking questions when you're going to the point of like putting it on the brass plate in front of the skyscraper. Kind of, Mavericks are here, really, So they exist, but they're subject to. So that Steinhardt was being sued because he was losing money. If you're making money as a hedge fund, you can let rip. You can get away with anything. People will be very, very forgiving. But as soon as you start losing money, the inquiring mind arrives at your desk and life gets a little bit hot. So the contrarianism that I had was to be able to identify points in time where the generality of the crowd. So, and I torture myself reading the F Times. I prefer to call it the F Times, because I hope that it kind of exposes the prejudice of the present, and I look for times when the prejudice of now is out of kilter with the trend in the price, and so you're falling over yourself with people proclaiming the death of fixed income, the death of bonds, and yet there is really no strong evidence of that with regard to the trend in government bonds as of yet. And so that's when that's why we're having this conversation, because I'm very cognizant of where that trend is, and I'm very cognizant of events in 2005, I'm very cognizant of events in 1982, and I'm very cognizant of events in 1979 when Paul Volcker was made president of the Federal Reserve, and paradoxically, when he raised interest rates into an economy which was plunging into a profound economic contraction. And I'm very conscious of events even before then. So my question is, what are you conscious of if you are seeking to manage risk capital?
Profound words, people. Profound, very profound. Well, this is complicated shit here. This is complicated shit. Well, I will say something actually. I think what's quite interesting, people, is that since I've known Hugh, the amount of stuff that he reads and he talks about these people, they were almost like his superheroes. So if you imagine Batman and Superman and Captain America, and I think with Hugh's quite interesting is that he reads these books almost like these people are his superheroes, these former investors. This guy called Jesse Livermore, I think we've mentioned. There's many others. And I think I never really appreciated that you could read their stories, take something from them, learn from them, and be inspired from them. I mean, I like football, for example, or soccer for an American audience. So I read a lot of, well, not a lot, but, the occasional soccer biography. But I can never obviously be a footballer. I can't go out and, recreate a football match or do it. But you can actually do that by looking at these investors and live, I'm not saying live vicariously through them, but you can almost sort of jump into their shoes, put on their suit, put on their cape and do it, which I think is quite interesting. And I hope people, maybe for some people, Hugh is a bit of a legend. He's very modest. But that's what I'm saying. I think what's great about this is that, you could almost take Hugh as your superhero and jump into his cape and, tights and off we go. And I think that's what a lot of people maybe don't appreciate about investing. It's a kind of passion. It's a hobby. It's not just looking at spreadsheets or someone telling you, invest in Tesla. There's a whole other side to it, which is much more interesting, much more invigorating, and a lot more fun. And I think that's probably one of the reasons why we're doing this podcast.
It is well said. I do wish to. I cast my net far and wide for inspiration, and I believe I did quote did he play for AC Milan? Inzaghi?
Yes.
He's now the manager of Inter. Who did he
Pippo Inzaghi. Yeah, Filippo Inzaghi. There was a famous quote. I think it was Alex Ferguson said that he was born offside because he was always just on the edge, of scoring those goals. He was always in the days of VAR, which for people who don't want to follow football is like the kind of video assistant referee where they rewind the game and then they see if it was right or wrong to award the goal. Before in football, they didn't used to do that. They used to just go with it, whatever the ruling on the pitch was. And I think a lot of his goals might have been chopped off if we had that now. But anyway, sorry. But back on to Filippo Inzaghi with Hugh.
He said something which was genius, and I will share that with you. And everyone hates VAR. As a manager, you hate. Well, it's very uncomfortable when you have a VAR day. VAR day is when your returns pop out of the statistical definition of normal, like we discussed with the US Treasuries in this first week of the year. And actually, I have to thank that data that I was using. I was quoting Jim Bianco. I don't know Jim, but through the random nature of trolling, I captured that and I noted it. I disagreed with his conclusions. His conclusions were that owing to that VAR-like experience, it was another death nail in the bond market bull. I thought it was funny because he then, like the four nearest comparisons were all in modern time. and they were all proceeded by a recovery in the treasury market. So whatever. But yeah, VAR in hedge funds and now VAR in football.
And may I just double back just very briefly before we end this section, talking about books. If we've got any fresh-faced young people, maybe teenagers that want to be a hedge fund manager, is there a book that you would recommend to you in particular, like one book that's for someone who's not an investor now but's got an interest and maybe wants to do it as a career, or something you would sort of point them in the direction of to give them a bit of inspiration and show them that other side?
If they had not read, if they had spent a life which had not taken them on a path of curiosity, which led them to the door of Atlas Shrugged, I would find it very difficult to give them a job.
So Atlas Shrugged is the one you would recommend for any budding hedge fund managers?
Wouldn't make them better investors. And the stock answer that I have to that is actually a Scottish author, John Buchanan, John Buchan. I think we say John Buchan. You say Buchanan. What would you say? Why would I ask you? How would they say that in the real world as opposed to the? Why
am I Scott? I didn't realise. Have I got a Scottish accent? Okay, fair enough. Slight twang.
Yeah, there's a reason why we have closed captions on YouTube. Anyway, John Buchan, and who most celebrated for the 39 Steps, wrote a short, I have to emphasize, a very short novella, which was called The Gap in the Curtain. And if you want something which is kind of more like metaphor, but which just reams, it just exudes the wisdom of markets, that's your book. But if you know me, you've already had that recommendation. And really, the best answer is read anything. Read until your brain weeps. Just keep reading, because that's how you stimulate a curious spirit.
Right. So we'll get one. Well, that on that note, they're going to do Hugh Hendry, the Acid Capitalist Wheel of Fortune, where he picks a number, tells a story, and then you can get to your reading. Last week he picked number 19. Sorry, the kill. 19's out. So between 1 and 59, Hugh, spin that wheel.
14.
14. Okay. 14 is Africa. Do you have a hedge fund tale involving Africa?
Too many to mention.
Don't mention the Robert Mugabe one. You can't say that one.
I know.
Yeah.
But there is a Robert Mugabe one.
People, the B word again, people, the B word.
The best story actually is that, so there I was, and I had made 32% in 2008. We had started the year 2008 with between $200 and $250 million of assets in the hedge fund. We have, in the worst month almost ever for financial markets, October 2008, we made 50%. But it'd been rocky, and so there were some losses that had to be placated. So for the year, it was a net 32. And I was not acclaimed. I was ignored, worse than ignored. Clients actually pulled money out of my fund. And so by the late summer of 2009, my assets were down to like 50 million. And I was a little bit cheesed off, as you can imagine. Anyway, one of my former investment partners, Espen Bardston, who was goalkeeper for Spurs and Watford, and a great character, we went off to Namibia. And again, it's just like
I know where he's going here. I love this. Sorry, carry on.
Do you? Well, yeah, I can go so many ways with this.
No, carry on. No, it's interesting. Yeah.
No, I'm going to keep a path away from the bee. We spent the best part of the month of November 2009. So what do hedge funds do? Two guys, me and Espen, we went to Namibia, completely off the map, no tourist season, whatever. We hired a guy to drive us around the country. It's not that big. And again, that had some really terrible German. That was the only German colony. And there's a story where there's there was a purported village of beautiful blonde Germanic ladies, which Espen wanted to visit. And when we got there, I mean, they may have been beautiful, but it was in the 19th century, not in the 21st century. But we were there and we were reading, names. There was this classic academic paper which was examining what happens when government debt as a share of the economy exceeds, I want to say, 70 or 80%. And it just demonstrated that economic growth stagnates, that it doesn't stimulate, it loses its facility to stimulate the economy. And it's very dry, but we sat there in the back of this like 4x4 going over deserts, and we were in hot air balloon. I mean, like, we stimulating the mind, getting out of the office, shutting down the Bloomberg. I mean, we had it on our phone. That's mostly what I think of when I think of Africa, apart from what is in the unmentionable book.
Exactly. Well, brilliant. Thank you very much, Hugh. Anyone that's got any stories of Africa or any books to recommend for the two of us, please leave in the comments. We'd like to hear from you both. But, it's goodbye from me. Thank you very much for joining us this week. And I'll leave our maestro once again to sign us off.
I was about to grab that guitar and go A5, A5, A12, A12, but I will not. I will spare you the injustice. I torture the music. Hope that I haven't tortured everyone else for the last hour. Thank you very much, everyone.